I just bought a company trading at nearly 52-week highs, and that company is Palantir. I bought 16 shares of it to start a half position in the company. What do? It's a company that can help government agencies and businesses sort and analyze data and provide insights and solutions to problems using AI and machine learning. They just got a big government contract. Palantir won a $178 million deal to work on the Army's Project Titan, an AI-fueled battlefield system. They won this contract going up against Raytheon, which is an established player in military defense. Palantir mostly had government clients, but that's beginning to change. And now they are targeting businesses, and they are doing it with informative boot camps where they demonstrate how their operating system can integrate into your business to maximize its efficiency, increasing profits, and reducing downtime. In their recent AIP Con, they are selling private companies LLMs that are company specific and fully integrate in their existing systems. So think of it as a chat GPT, but for your own business, and you can ask the chatbot different queries to help analyze and point you in the right direction to make the best decision possible given a problem. General Mills remarked that because of the software, they save $40,000 a day. That's $14.6 million a year. Panasonic showed a very cool demo of how the Apple Vision Pro, along with Palantir software, could be used to help their technicians diagnose issues via the use of error codes, which could reduce downtime of their machinery. Palantir is a company that has high margins, and they provide a valuable service to their customers, and their scale is virtually limitless. I would not be shocked if this company multiplies in size and becomes much larger than it is today. So while the valuation is a bit scary, having a high PE ratio, the fact that their software can integrate into any type of business means they have a very large total addressable market to continue growing exponentially.
Ask Adam, or Adam as we call it, uses AIP and our ontology to serve as a co-pilot for the technician. Adam can take a maintenance work order and link it to a wealth of information, both official and unofficial, and make suggestions about what an MT should try to resolve a problem. So let's try to troubleshoot this machine. As we walk around, we can see that there's a flashing red sensor indicating that it's a cause for the error. Adam will then take that sensor data and start building out its recommendations. Before Adam, an MT would have to search a variety of databases and manually piece together relevant information, which is a huge waste of time when you have a down machine right in front of you. Now, at their fingertips, MTs can see work that was previously done on this winder, the spare parts that were replaced, and the results of any quality investigations that took place recently. We have over 1 million tickets in our system full of tribal knowledge. Adam can read all of these comments that MTs put in and summarize in the order from easiest to hardest suggestions for how a technician should press forward. Finally, Adam can search our library of controlled documents and only surface relevant instructions for the problem at hand. So you can see here, we just learned from Adam that all we had to do was replace that switch, and now our machine is back to making batteries. As a last step, the technician will record their fix, and it is indexed back within the Adam system, enabling the platform to become smarter and more robust as time goes on. Ask Adam's driving uptime on our equipment by providing information to empower technicians to get to the correct solution as quickly as possible. It also serves as a vital training tool for our new or even veteran technicians who are confused on how to proceed with troubleshooting, cutting that 3 to 6 month learning curve that I mentioned earlier down to just a few weeks. Now, what I showed in this demo is just the start from Adam. Everything we do in version 1 will enable us to build out more features in version 2, where we're talking about features like smart PM scheduling, which will enable us to go from a preventative maintenance to a proactive maintenance state and start to answer the questions, not only what's going to break today, but what's going to break tomorrow? What's going to hold us back in a week or even a month? We're also considering automated spare parts management to be able to feed the technicians the parts that they need when they need them at a low cost. Looking even further into the future, with our continuing partnership with Palantir, we're building Adam as a gift for our future sister plant in DeSoto, Kansas. With Adam, the Kansas MTs will also be able to tap into all the experience and tribal knowledge that we've gained over here in Nevada and deploy it immediately halfway across the country.
So in my account, I'm currently at $34,130.05. And if you want to follow along with my portfolio updates, please do leave a like and subscribe to the channel so you never miss one of my updates. So let's get into the TFSA and the buys I did there. In the TFSA, we're up to $32,273.93. And let's get into what the happenings are with the TFSA. So for Apple, they have announced that they are completely out of the EV space, that they're not going to be making an Apple car. And, investors haven't been too happy about that. It's dropped out of the 190 range. It's currently in the 170 range. But they did mention that they're going to have a larger focus on AI, and they did recently announce a small acquisition into an AI firm. So I do think that heading into AI is going to be a bigger growth profit driver for Apple, because even if you look at like the best EV company right now, which is Tesla, their margins aren't that high. So even if Apple were to generate tons of revenue from vehicles, they would still only maybe be netting a 10% profit margin, and that's probably at best. So I do think, while this is kind of shocking news, it kind of came suddenly, it does make sense, because a lot of these car companies basically just go bankrupt. So it's a very difficult business, and I don't think it's necessarily the right place for Apple to start fighting into. And there are some rumors that Apple is actually going to be getting into making a fitness ring.
One ring to rule them all.
Because Samsung recently announced something like that. So it would make a lot of sense for Apple to get into that market, sell watches, sell rings, and AirPods. So a lot of their accessories really go well into their ecosystem with that iPhone that they have. So I'm not buying Apple right now, but it's not far off from where I would consider buying it. Right now, I think Amazon is a more interesting company to purchase at the moment, just because they're growing their free cash flow like crazy. They're optimizing the business, and they should continue having a very good 2024. And that's why I started a position this year in Amazon very recently. I bought about 0.4 shares of Amazon, just adding to the position a little bit. And I'm reinvesting my Apple and Microsoft dividends into Amazon right now, because I think that it's the more attractive opportunity, because Microsoft is trading pretty high. I still think Apple's trading pretty high even with the downturn, but if Apple falls enough, I'll definitely continue adding to my position. I'd be very interested in doing that. And then with Dollarama, I bought 2 more shares, going up to 10 shares total. I still think it's trading below what I would consider fair, which is about $110. That is just my opinion, though, so do your own research before you make any investment decisions. And with ENS, I purchased 11 more shares. This one has just not been performing very well, because we're still in a very high interest rate environment. It doesn't look like we're going to be getting the 3 interest rate cuts that a lot of people were hoping this year. So Enbridge is still going to stay beaten up, just because they do operate with a lot of debt in their business. And then with EQ Bank, I bought 5 more shares, going up to 17 shares. It has pulled back a little bit, but they recently had very nice earnings, and they did do a dividend raise recently of about 5%. So I think they're heading in the right direction overall. Not very concerned about this. And I am starting to see their advertisements on TV fairly often, so it's nice to see that people are getting aware of this smaller Canadian online-only bank. And then with ETHY, Ethereum has been going up pretty high. I'm actually only down a little bit in this fund. This used to be as low as down in the red by 50%, but because Bitcoin has been rallying a lot recently, it has recovered quite a bit. So that's nice to see. We'll see if that continues to happen in the future. I think Bitcoin is having a halving in sometime in April, so that's going to make Bitcoin a little bit harder to get. So lower supply should increase the demand of it, and we'll see where the price goes. And then with Palantir, we did just start this position with 16 shares. It is in the red a little bit, and I did express a bit of concern regarding the valuation, which is why I would recommend anybody that, if you want to get into a company and you're not 100% sure on, the price, and, you think there is a bit of downside. Maybe just buy a few shares here and there. Don't go for a full position right away. It really depends on the circumstances what you do, but I'll add to this, slowly over time. If it does see some more price declines, that'd be great, because then I could build my position at a lower price in this very exciting tech company that's growing pretty rapidly and has a lot of potential to grow even more. And then with Smart Centers, I bought 3 more shares, going up to 73 shares. Again, real estate, just like Enbridge, has been absolutely pummeled, but I'm not worried about it long term. As soon as we do get interest rate cuts, this is going to reverse, and it's going to reverse quickly. Same thing with TELUS. A lot of these are just not doing well, the banking and in general. And with the dividends earned since I started the portfolio, I've earned over $2,400 in dividends. Annually, we've gone from $14.19 a year to $14.93 per year. The monthly average, we have grown it from $118.32 up to $124.45. And on the daily average, I have completed my goal that I set out for 2024, which is to receive $4 a day in dividend income. So we are receiving $4.09 per day versus the previous $3.89. So my next goal is actually to earn $5 a day in dividends, and we're already well on our way. Just 91 more cents per day to the daily average. We're up to 5, and then we're going to keep increasing this. And I've also started tracking my days of freedom. So essentially, I have calculated my annual expenses for, these are just, my bills and my food. It doesn't include anything else. So assuming that my daily expenses are about $61 a day, my portfolio's annual dividends will buy me almost 24 and a half days of freedom versus 23 from the previous update. So this is going to be a very fun number to track. Once this hits 30 days, then I know that my dividends have basically purchased me about a month of freedom from work. If I decided to not work for some reason, the portfolio could cover a whole month's worth of expenses, which is cool. And if I do hit that, then it will basically tell me that if I multiply that number by 12, I can cover a whole year's worth of expenses, which would be extremely exciting. And you could work part-time or stop working entirely. And the final goal I had was to reach $1,500 per year in dividend income. We're at $1,493, so not too far from that goal. We should be able to hit that by the next time I have an update. And if we look at the dividend growth year over year, we can see that in 2024, I've already out-earned all of 2021. The first year of investing, and March isn't over. I'm still going to be receiving a lot more dividends in March, and we are projected to eclipse 2023 as our passive income continues to grow in this portfolio. So that's pretty much it, and let me know in the comments below what you guys are buying in the stock market, and I'll see you guys next time.